let's jump into stocks. And of course, one of them is a tech stock that, listen, I've been very bullish on this stock for about the last 6 months. And Twitter kind of put egg on my face over the last 30 days. So,
Twitter's a fascinating company, by the way, because it seems that, that it's such a simple and I would say elegant design, right? It's just a very easy to use. It's tried to be copied. It can't really get any legs. And then you have other things that are just so much more robust, like a Facebook, which has a much greater ability to target. I mean, that's the beauty behind Facebook, right? Because when you sign up for a Twitter account, what do you have to give them? Your birth date, your name, and that's pretty much it.
Very limited. Yep, very limited.
And there's really no shopping on there. It's really, there's not a lot. There's some hashtags going on, but it's a kind of a different experience. It's more of a idea exchange to a degree. It's more of a communication device rather than Facebook knows everything about where you are, what you're doing, where you're going, where you're shopping, who your friends are. It's kind of a different experience. And Twitter has done a really good job over the years. I mean, I'm a big fan of them. And it's funny because we would have thought over the last 30 days that with the, I guess we call it censorship, with what they're doing with President Trump, former President Trump, and a few other players, that they were going to lose a lot of users. And they did. They did lose some users in the last earnings report. They also talked about the problem that they're going to have with the iPhone, but their numbers look generally good. Otherwise, their advertising revenue is good, and they're on the right path. So, and I will tell you anecdotally that in their feed, there's a lot more advertising than I've seen in a while, most recently.
Yeah, well, they did say that they were going to see some revenue jumps potentially for the next quarter, which will be interesting to watch. Right now their numbers are 330 million active users, 145 million daily active. This is 2021 numbers. 63% of Twitter users worldwide are between 35 and 65, so they've got an interesting audience, one that I think is in the right place. Average session time, 3.39 minutes, 11.7 million downloads of the Twitter app in the first quarter of 2019. Kind of curious what that number was, but here's the number that I think is very critical to the future of Twitter, and that is 75% of B2B businesses market their products on Twitter. So let's assume that Twitter changes course, and there's a lot of people speculating whether or not they will go to a subscription-based product. If they go to a subscription base, it's pretty much going to push out the trolls and the bots, and you're going to end up with what could be the single location for the influencers on the planet. And this is everything from journalists to someone who's an Instagram celebrity that also has a Twitter account. So with that being the case, if Twitter is or becomes kind of the repository of all the influencers in one place, and B2B is kind of their play, I mean, especially kind of, this show talks to a lot of business owners across all aspects, and Twitter is always one of those that is being used in terms of their marketing effort, including our own. Twitter is still one of our most powerful, platforms. What are your thoughts? Will that take the stock from where it's floating right now in the $60, $70 range? Could that hit $100 mark if they go
first of all, there's a lot to unpack there, okay? There's a lot to unpack, because if we have a subscription model, who's on the subscription? So let's say we blow out the bots. Let's say we blow out the other players that are out there doing no good, right? There's a whole big group of that. And if it's a subscription only and you have the influencers, who are the influencers talking to if it's subscription based and people don't want to pay for it? So the casual user that maybe just saw something, they clicked on it, can they still see it? So is it going to be kind of a model that we have a subscription for tweeting and then reading is free? That's kind of an interesting model. That would be kind of...
That's kind of what they have now. You can still access a feed unless you've blocked your feed, or you've went private. So you can discover it, and you still, even though within Google's search engine, there is some questions as to whether or not tweets do show up, even though right now, even if you search my name, my Twitter account is probably my number one search result. Which amazes me.
So I think that there is something to be said. First of all, companies are hysterical about the potential for moving to a subscription model, because nobody's made that move, right? Nobody's really done it yet. There's been some
Not in
that
social, for sure.
on social, right? They're terribly afraid of getting away from the advertising. I would think there should be a dual model. So the dual model is if you want to have some other features, I'm not exactly sure what those are. Maybe some additional features with no advertising, like cable used to be, like cable used to be, where no advertising, you pay a certain fee for that. And then they'll figure out what the user fee should be according to what the advertising consumption is per user, right? And then the other people will get advertising. I mean, I think that's a very simple model. They have that. I would probably go for a Twitter model with no advertising, just so it doesn't junk up my feed. And I don't have to figure out every once in a while, like, is that an advertisement or is that not? So I think that's a really good revenue model. I think of all the companies out there, probably that Twitter is very prime for that, because the people that use Twitter, especially those that are very much involved, integrated, as well as, well, some people consumed with Twitter, will very likely pay for that. And the people that don't, they can still get the advertising. Plus, there may be some additional things that they can then, once they move to that model, get into. For example, if you want to get to free, we're going to have to get some information from you, thereby allowing for further targeting of the advertising. So there's a kind of a quid pro quo. Hey, you want to come on board? You don't want to pay? Here's the deal. You're going to get advertising, but we need to know about you. Now, theoretically, you could write down, I could put in a new Twitter account, right? I'm a 19-year-old girl. I live in California, and I love pink dresses. I don't know. I could do that, right? And then who knows if that's really me, because they're not confirming that. So there's something to be said that could be positive and negative. Could it get it to $100 per share? I mean, I think right now the advertising force and where we are, I think we're at peak advertising right now. With everybody staying inside due to pandemic, I just think we're at kind of peak advertising.
Yeah, for sure. All right, so Bloomberg kind of broke this down, which further kind of details into the whole point about subscriptions, and they basically have this Skunkworks project, codenamed Rogue One, which basically and includes also some tipping elements, but also, you know, they had the recent acquisition of Review. They're also rolling out their new program called Twitter Spaces, which will essentially kind of compete with Clubhouse. Those kind of plays, and even if you had 145 million active users daily, and let's say that 40% of those were bots and trolls. Right. So you're setting on 100 million, let's say 100 million users, that potentially could be a target for subscription. And if they are and go down this path, that would increase dramatically in terms of their revenue opportunity, especially if they folded in, you know, some advertising with that as well. Now, all that being said, do you think that even just this speculation here recently, or Twitter's hard stance on, you know, pulling some people off the platform, has caused their stock to rise over the past few weeks?
I mean, I think it was all into the earnings potential. I mean, we've seen other stocks in the space, like the Trade Desk, hitting all-time highs just recently on their earnings. They just blasted higher. And we saw like Digital Turbine, another one that deals with digital advertising, and that it's just they're all hitting on all cylinders right now, because advertisers are looking to get to people, and you can't. You're no longer putting out a for sale or a sales sign, 50% off at Macy's, and people are buying stuff. Why? Because people aren't going there. So what you have to do is come up with a different model, and everybody's trying everything they can to do so. By the way, just one other point on Twitter, you mentioned all the things they're rolling in. They're rolling out Periscope. Periscope is closing down. They'll have some other way to do live, I guess, but Periscope is history on Twitter.
Yeah, well, I think Twitter Spaces is kind of their target, because they're seeing the potential. You know, the funny thing is about Twitter, if you know Twitter's history, they were a podcast app before they were what they are now. You know, basically a social, you know, sharing, you know, short messaging. But when Odeo basically launched it, when Ev and even Jack were in that process, that was a whole podcasting platform that they eventually spun, because they were about to fold. Spun into what we know now on Twitter. Let's talk about kind of the future here. There's two dominoes that are just sitting here that a lot of speculators and some analysts are looking at that could be a big play here, and that is CNN. So, all right, so we see CNN's ratings continue to decline. Obviously now we're post-Trump era. a lot of major mainstream news could be devalued fairly quickly based on numbers. When you look at Fox dropping in terms of their numbers, CNN dropping, is this a potential opportunity? Because Jeff Zucker, he's out this year. He's already said it. He's gone after this year. So, and that being the CEO of CNN.
I don't see where the marriage comes into play in such a way that it's okay, but I mean, then they're taking, I mean, as we know today, they're going to take one side then. Now, if Twitter does in fact buy CNN.
They already take one side.
Well, but they're really going to take one side. I mean, they're really going to be seen. One thing they say, oh, okay, they had some reason to do this, okay?
We need an MSNBC of social, right?
I don't know. I mean,
it's going to fall to, you already have the Fox of social, which is Facebook, right?
Yep. And you got the conservative of social, which is Parler. They're back up.
Exactly. And who is back on now? So
I don't know.
There's a lot, even though I still think they kind of missed the turn there.
I would think that Twitter would look for other opportunities, maybe try to get back into these spaces things. Interesting. Everybody likes, I just got my first Clubhouse invitation just yesterday. And I'm going to check it out, see what it's all about.
Oh, you got to send me one now. You're in the club.
Right. Yeah, so I got to get it to you.
Send me one.
So
yes.
I just signed up yesterday. I don't really understand what the story exactly is. Somebody already took my name, so I had to find another name to use. So it's interesting. It's all audio, but it doesn't seem any different than just doing a Zoom meeting with just all audio and everybody muted. So I don't know. It's because it's on my phone. It's so exciting. But I just don't see the real wisdom in an acquisition right now of CNN. I'm hard pressed to really understand. There may be some numbers behind it that make sense, but other than that, I don't see it as a market benefiter for anything.
I'm so glad we get a chance to talk, because I know that we have differing opinions on this. And most of the time we have differing opinions, which is a great conversation.
Yep.
So, my theory is there are a few pundits out there that are kind of pointing to this direction. If Twitter is going to make the play, and I think they have to do it after they replace Jack Dorsey, their part-time CEO, because he's got to go.
Right.
I mean, they need to run this like a real company, and I still can't figure out how a publicly traded company has a guy that's working there part-time. As CEO.
Listen, I'll take Jack part-time over Dick Costello full-time.
Okay.
Or I'll take Jack Dorsey half-time versus double-time for Dick Costello. What a disaster that was.
That was a disaster, but I mean, come on, Jack's sitting on some island right now. Zoom.
Yep.
Zoom.
Yep.
Wait a minute, the stock is up to 70?
Square. Yep, exactly. Yeah, no, I agree. That obviously we need somebody with a much more refined outlook for the company and a much more laser-like viewpoint on the company. And it's very difficult to run one company at a time, much less two companies, both Square and Twitter.
I'm just still amazed that the board of directors does not jump in here and just say, hey, listen, we just got to get serious about this. We have an opportunity. Here is our play. We could be considered, the good guy in the media space if we play our cards right and come out of this thing somewhat unscathed. I mean, you've got Facebook facing down Australia right now, which who knows what's going to happen there. I mean, that's a real deal. Yeah, somebody. Do you think Australia is going to cave, or do you think Facebook is finally just going to say, hey, let's settle this thing?
I think depending on the government, right? So it's probably going to be temporary through this government, and then the next government, they'll cave.
Yeah.
Australia? Australia will cave.
Or Facebook?
No, Australia.
Australia caving. Ooh,
I mean,
wow.
Listen, Google hasn't caved on certain things. You've been to China, you can't get, you have to use VPNs and stuff like that to get. You can't get Facebook in China.
Right.
Yeah, you look up Tiananmen Square on a browser in China.
Never gonna. It
does
gonna
not.
Find it.
That's true. I've done this. It does not happen. So I think that there is a real concern right now with what potentially, and I'm not making a statement about this side or that side or in the middle, but the potential for problems that are generated by social media. Listen, I'm not a big fan of social media from the aspect of puking out every single thing that's on your mind all day long. I think
Sure.
people forgot about how to be reserved and how to be, I think, reasonable in their thought process and what to say and what not to say. And it's going to get a lot of people in trouble. There are people like, what do you mean my employer that I'm thinking about going to is looking at my Facebook? Oh my gosh, I got to clean that up. Or what about those, nights when I was lighting shots on fire, taking shots and showing my speedometer at 95 miles an hour that I clipped and posted on Instagram? Oh, I didn't know that was going to be a problem in the future. Okay.
Yeah.
Yeah,
I think that, there are certain companies that probably look for those kinds of scenarios. So
right.
It's going to be fun to watch. All right, so let's get down to the nuts and bolts here. Twitter trading up again as of this podcast. If you were looking at this, and I'm looking at my dashboard right now on Webull, strong buy, hold. What do you think?
I think it's a buy. I think that right now I'd like to see it roll over a little bit, test down again. And you see that recent ramp that it took, that takeoff in the last 3 weeks, 3 weeks? That recent move that was kind of more of a parabolic move post-earnings when they did disappoint on earnings a bit. And don't forget, they guided soft. The company guided soft.
Exactly.
There's one other component here that we haven't even talked about. It's the potential lockdown of information that's going to be in the next version of Apple's iPhone iOS. Where
they kind of mentioned a little bit about that, of
that's
the whole
serious.
iOS issue. Yeah, it is absolutely a problem if they don't get it under control or get a deal done with Apple, which I still think they could do, because they are falling to that area in terms of their leadership. And Apple's all about, their position is still hardline on, consumer privacy protection. Okay.
I'm just thinking that they have to come up with a solution for that, because that information flow for social media is really important. It's all about, again, the information that they could resell. Don't forget, the product of social media is you. You are the product. Yep. And people don't really know that. They think, oh, I get it for free because this company is just so nice. No, you are the product. You are what they are selling. And if you don't know that, that is the case. So they need all that information, tracking on you, information on you, to provide for metrics to the advertisers. Then will decide whether or not they're going to be buying that name, if you will, or that group or that region for use. So now if Apple's going to lock down and do the reverse of what they do now, which is kind of without doing anything, you're automatically included. Now you have to actually do something to be included. So the exclusion point is the first line default.
Yeah, very interesting. It sounds very similar to a company we both know and love, and that being Robinhood, with that whole aspect. Hey, have you heard about this new company called Public? Basically kind of the anti-Robinhood. What are you seeing there?
I haven't seen anything. They're a trading company?
No, they're a trading company out of Northern Europe. Just opened up. It's it's a very different approach. They don't let you buy on margin. There's all kinds of restrictions there.
I have seen this.
In a good way,
Right, I have seen this. It's they also watch and restrict, and they only have certain stocks. They're not going to have certain volatility. That's great.
For education.
That is not what people want. That is not what they want. They want the margin. The hell with it. Get it going. More GameStop, man.
Sharks. Let's swim with the sharks.
Right, exactly.
I like it. I like it. All right, so you heard it right here, guys. Twitter is a buy, but be cautious, of course. I can't tell you that, but the good thing is Andrew can.
Yeah, and let me just say one thing. I'd love to buy it on pullbacks. I know that's kind of cliche, but that's what I'd rather do, because I've seen this ramp pretty well, and oftentimes we're getting to an exhaustion point. It looks like it's kind of hitting terminal velocity.
Exactly.
The stock, and just wait for a little bit of pullbacks and start seeding it up.